if a company I funded goes offline for some reason, I want the entire world to recognize. Like that's the impact that I wanted.
At Context Ventures, our Advancing VC podcast covers all things startup and venture capital, primarily how venture capital and startups are changing from the emerging manager perspective. We'll be talking with venture capitalists, limited partners, and founders who are actively working at the frontiers of our industry and advancing venture capital and startups. Today, we are delighted to host Jackson Moses. Jackson is the founder and managing partner of Silent Ventures, a Dallas-based early-stage venture capital firm that has become one of the most prolific players in the rebuilding the arsenal of democracy movement. With a background as a serial entrepreneur and an early investor in Anduril, Saronic, Firestorm, and many other great companies, he offers a rare dual perspective on building and backing hard tech for national security. Jackson, thank you for joining us. And to kick us off, can you please share how you got to building Silent Ventures?
Most certainly. Thanks for having me, gentlemen. It looks entirely nonlinear on a forward basis. It looks like the perfect story in hindsight. So really, I got my start, perhaps surprisingly, as a SDR at LinkedIn, which was a phenomenal experience. Forced me to learn communications, effective communications in a very friendly but also unfriendly environment when you get thrown into the world of enterprise sales. And so did that for about a year and a half before I realized that corporate probably wasn't going to be the way that I wanted to spend 30 or 40 years of my life. I left LinkedIn and I founded my first company, Spectrum AI, a synthetic data platform back in 2016. I really just wanted to jump into operator mode and build, albeit I had very few skills. I was a good salesman. I wanted to dabble in product, and engineering was something that, to this day really, really excites me. I'm not formally trained in that regard, but I've been dabbling with some ideas. I have a really great set of mentors and close friends across the venture ecosystem. And luckily, when I wanted to structure Spectrum AI, I had some really phenomenal people make a bet on me, because I sure as heck would not have invested in myself at that time. I was way too green behind the ears, but it was a company that did some really, really cool work with big brand names, USG. Everybody back in 2016, 2017 was trying to train their own internal machine learning algorithms, right? So we provided really just multimedia galore in many different, many millions of lines to, again, different customers. And it was a fantastic experience. We raised about $50 million. And I'll be the first one to say, I was a very mediocre CEO. There's so much that I didn't know. There's a ton that I still don't know, by the way. But I had really good people in my corner, excellent people. And they're the one that guided the company to its eventual exit. I had a lot of learnings that I took from that and eventually kind of stumbled my way into my second company. I thought my first company, I was done after that. I don't have much hair. The hairs that I do have are gray. I took an early life sabbatical in my mid-20s, but for whatever reason, this is a game that's fun to play and builders love to build. So I found myself working with several gentlemen to form what eventually became a company called Main Street, which was a programmatic R&D tax credit redemption platform, along with some other kind of government incentives. And that thing was a rocket ship, and that was a very fun experience as kind of head of partnerships, sales, doing all things BD. I got to take all of my learnings from Spectrum AI, the things especially that it did poorly, and really inject them into Main Street. And we grew astronomically. We went from almost folding to product market fit in 2 weeks to a $500 million valuation in a year and a half. And we did this all during COVID. I mean, we scaled to several hundred employees. It was just really unique. And that was a set of fantastic learnings. Some of my co-founders and I are still extremely close. That company was acquired. It looks like the company that acquired us will go public here sooner than later. And so relatively good outcome. But I think the common arc through, 8 years of my life was that I started angel investing when I did my first company. And that's where I was a generalist and I was investing in good people, good ideas, and just trying to get exposure. I find that when you invest your own money and you fail, the lessons, they stick harder. The learnings they're far less pleasant when things go wrong. Nothing's as gratuitous. And so it was a good thing because a lot of those investments went to zero. And I learned I was not going to be a generalist investor. But I did identify at that point in time that aerospace and defense was something where I was generating, at least on paper, kind of outsized alpha. And as I was kind of thinking about the future and how I might want to hone my skill set to do something of consequence, I said, okay, this is where I'm going to specialize. Easy to say now, very hard to say back then. Of course, this wasn't even non-consensus back then. It was, you're a complete idiot for pursuing this. And I'll be honest, right? 99% of the time, I hear that it's probably true. I do plenty of stupid things, but as those calls grow louder and louder, and it starts to echo more a sentiment of envy, you might be on to something truly contrarian. And so, didn't fight gravity, got to work with really astonishing founders, entrepreneurs from, concept stage, building things of substance. And I mean, that is so absent in venture capital. It was back then, it still is now. I could go on a whole diatribe about how venture capital is no longer a risk on asset class, and is more an index fund and with similar returns for a lot of different outfits. But funding true innovation. If I was going to put money to work, that's really what I wanted to see, built out. And if my money went to zero because of that, at least we tried bringing something seriously material for the benefit of the United States, for our sovereignty, for the warfighter into the world, right? And that's so much easier for me to stomach, even though we don't target losses in this business, than HR platform 100.2 is no longer in business. If a company I funded goes offline for some reason, I want the entire world to recognize. Like, that's the impact that I wanted. And so I kind of progressed through some venture partner roles, standing up aerospace and defense practices. And then while I was, managing companies, I ran a syndicate with some really, really great LPs. And we just kind of kept honing, collectively this thesis around defense tech and national security over the course of basically 10 years, to a point where, after my last company, Main Street, I have no hair left. So I said, we'll do the easier thing here, and we'll structure a fund, and that's how I will contribute to the ecosystem, because I do not have the chops to build a defense tech company. And, we incorporated in 2022. We raised throughout the end of 22, early 2023, deployed the first fund. We're deploying dollars actively into the national security and defense ecosystem. And we've been incredibly fortunate to partner with some of the best from day zero. And so now I'm running Silent Ventures, and each step forward seemed like a shot in the dark. I was very concerned with each choice that I made, but in hindsight, knowing what I know now, there's no other way that I would have wanted to get involved in venture. You got to put in the time. You got to take, you got to collect your learnings. You got to take a few across the chin, and then you turn into in some cases a very well-rounded kind of capable investor. And that's what we at Silent Ventures really excel at.
Jackson, thank you for that. You mentioned scaling Main Street, through a major acquisition. How, and you also mentioned, being well-rounded and kind of taking some on the chin to learn. How has being, like a wartime founder yourself changed how you due diligence a founder who is trying to sell, say, like a 5-year development cycle to the Air Force or in defense tech?
It's a very good question. I was not one that ever engaged really in USG sales, and at my companies we never sold into DoW. But along that line, Mike, I think being a founder, it's the only way you can go headfirst into learning and evaluating intangibles. GSB is excellent, right? We have incredible mentors. We've got very experienced people in this world, but there's nothing a textbook or a podcast. We'll try to make this as informative as possible, but there's nothing that, short of just launching headfirst into founder mode or early operator mode, there's no other way to learn those skills, those lessons. There's no way to short circuit basically the scar tissue that you build over time, and the licks that you take to then really directing you on a correct pathway to build. And at the earliest of stages, which I really love 0 to 1, 1 to 10, I'm all right at. 10 to 100, there's millions more people that you could hire, ahead of myself to carry out those jobs, those obligations, those duties and responsibilities. early stage to me is about people. A very smart man, one of my close mentors, he told me people make or break companies. And that's always lived in the back of my mind. I've since kind of refined and honed that for myself, which is, it's also kind of self selection, right? Is with founders and founding teams, really smart people don't go after really tiny markets with inferior products, right? And so my learnings from being a founder are that, you know, things are going to be chaotic all the time. It's like, leading a company is like walking across a hotbed of coals while chewing glass and smiling the entire time, by the way. It's 100 fires with one fire extinguisher. Which one are you going to put out, and then how are you going to deal with the others? And there's just something about building and being on the front lines and being really just engrossed with the culture, right? Like you would live this day to day. I can't stress how much my days were 16 hours, right? That's why I'm 33 and I look like this. You age quickly doing these things because there are stressors. And you know what? They're quite enjoyable. There's plenty of stuff that I didn't like about being a founder, but there's even more that I loved about it. And it's a very rocky roller coaster esque type of experience. You take the highs, and they're the highest highs you'll ever experience. You roll with the lows, you take the punches, you learn from them. But being a founder operator, prior to going into venture, I think allows you to diligence correctly founding teams, their capabilities, and especially if they have staying power. Are they going to be around for the long run? And how are they going to take those shots across the bow? How are they going to take adversity and really convert and channel that energy into something positive? Because if you told most people, if you could somehow expose them to the again the chaos that is building a company, even just 6 months in, no sane person would ever sign up for it. No sane person. I mean, possibly behind raising kids, which I have not done yet, so I can't say this definitively. Building a company is one of the hardest things you can do in this world. There's a reason that we don't have, millions and millions of billionaires walking around. If it was this easy, everybody would do it. And it really takes a very special character to, it takes a very special archetype or set of archetypes to build something from nothing and bring a huge vision to fruition. It's just it sounds so simple and we speak in platitudes all the time, but that is a very hard thing to gauge with people. And a lot of founders don't know what they don't know, right? So part of my job is evaluating sometimes characteristics about others that they're not even aware of. And we do things by proxy, we do things directly, but it really is de-risking the human variable because product markets evolve, products adapt, right? But people are core, and if your first 5, 10 people are not built for the startup ecosystem, if they're not built for that journey, if they're not built for that grind, if they don't embrace adversity, then the company's not going to make it. So with us, we don't try to overthink at Silent Ventures what early stage investing is, pre-seed and seed. It's 90% people. The product, the market, sales, technology, the fit. We can do the whole diligence, competitive landscape. We can learn the opportunity quite quickly. We can see where there are areas to land and expand versus what is owned by incumbents. That's pretty analytical. That's strategic. Any of us on this call could do that. But identifying the right person or the right set of people that are going to fall on the sword to make something happen, that's really hard. And I think that's the biggest learning I take away from having founded two companies, having run one okay, and having run the other really well.
Man, there's so much to say here. Your analogy about what it's like being a founder, I equate it to walking around with a bloody nose 99% of the time. Just when you wipe the blood away, it starts to trickle again because you get punched in the face. So
Yep.
I can 100% relate to that. What I'm interested in hearing from you is the ability to read the room. So you've been focused on, the emerging, as we now, defense tech space. But what did you see 10 years ago, that said, hey, this is where I want to stake my flag in the ground? And what was your point of view at the time?
Mike, I think that really gets back to people. So back in the 20 teens when I was doing this, right? And there's a collection of others that are now the biggest names in not just defense tech, but in venture capital. Funds that people weren't even considering several years ago are now the highest in demand. And I couldn't be happier for my friends. Like that is a testament to their foresight, to their ability to execute, and for their ability to generate outsized returns for their LPs. Like that's phenomenal. And that's what should be rewarded in this business, right? Reverting back to funding innovation. And for me, it's just more bells and whistles that they're doing it to, proliferate America, to protect our security apparatus, to ensure the sovereignty of this country and our allies, and to really put forth and prove that the things that so many take for granted are not they are not guaranteed in perpetuity, right? And that gets back to folks like yourself who've served this country. That gets back to the capabilities we outfit our warfighters with. That touches a whole set of parameters. But for me, 10 years ago, it really was, as a generalist, it was, I'm talking to folks that are doing SaaS. I'm talking to folks doing fintech, health tech, all of these things. And I'm having these kind of like side fringe conversations because it wasn't so cool to be doing these things, right? The deep tech, defense tech back then. I'm having these conversations with impeccable people, folks that are like, I don't care what the valuation on this company is. I don't care how much money you give me. We're not going to argue over these things. We're not going to, quibble over basis points, this, that, and the other. We're doing this for the love of the game and the love of our country. And like, if you want to be along for that journey, we would be privileged to have you on board. To which I'm thinking, I would be more than privileged to get to finance you, right? I don't presume to ever just be on a cap table. Like if a founder invites you to the round, then you've really earned it. And that's something that you have to take to heart. But I kept having these conversations, and it was just, we're supposed to pattern match in VC. Some of us do it exceptionally well. A lot of us don't. I know I have my good days. I have my bad days. But I just kept running into remarkable founders. And they saw, well, even before myself, problems with our defense tech apparatus, or sorry, our national security apparatus, for which defense tech would be a sufficient solution. They saw these things front lines, whether they were veterans, again, like yourselves, whether they worked in government, they're bureaucrats, or they were just working at other startups involved in deep tech. They saw the problem set. And for me at the moment, it wasn't hard to envision looking forward how certain companies and business models could really just level the playing field. I mean, they could capture entire markets largely because nobody's, competing against incumbents. Nobody wants to challenge them. And the bar to challenge incumbents, the prime contractors, is not high. Defense tech, to be candid, is an arbitrage of three things. It's an arbitrage of pricing, it's an arbitrage of lead times, and it's an arbitrage of scale. How much can you produce, right? What is your capacity? Can you do that in a timely manner? And can you price it at a level that allows for generous profit margins, but also saves the US taxpayer and government a lot of money? And everyone just had this everyone that I spoke with back then was very aligned around that. And they still are. And so I just thought to myself, look, if we're making generational bets, and this is a little bit more obvious now, and I've definitely had time to think about this and hone kind of how my thesis evolved over time, is that, what is the price of sovereignty, right? Like what is the price that we're willing to pay for the lifestyle that we live? And, that's reflected in the NDAA, and the NDAA goes up every year. And under this administration, it might touch 1.5 trillion. I'm convinced we'll probably hit 2 trillion by 2030. And we can look at that as a proxy for how volatile the world is, how low our inventories are, how inefficient government is. We can examine it a ton of ways. But ultimately, I think if you went to most Americans and you said, "Hey, do you like the way that you live, especially relative to the rest of the world?" I think you'd receive resounding yeses, especially anyone who's traveled. And if you said, "How much would you pay at a federal level to ensure that the lifestyle that you live is not corrupted?" I'm pretty sure that's one of the most inelastic, pricing lines out there, and I think it's far in excess of 2 trillion. So again, I've had the opportunity to kind of refine this, Mike. But outside of the people, it's clear that the contractors have not lived up to the many promises they've made repeatedly, time and time again. Whether that's the cost plus contracting structure, which is honestly perfect lobbying by them and the best type of capture you could ever have as a business, but a completely abhorrent model for DOW and for Congress to have approved. Whether it's that or whether it's literally the capability set and the low inventories that never evolve or we never see innovation around, and that we have very de minimis amounts on hand. I mean, as you guys know, our magazine coverage and our magazine depth is terrible. It's clear that something had to change. It's kind of adjacent to something like health tech, where you're going up against insurance, right? It's such a large addressable market. It's growing. There are several incumbents, and they don't operate correctly or well. They're very suboptimal, and in pretty much everything they do, and they have the incorrect incentive structures so that they just continue to exist and never thrive. And here I am seeing a ton of founders that want to build things and solutions that enable us to thrive. And they themselves want to thrive. And they want the United States to thrive. And they want our servicemen and women to be safe. If that's not a story you can get behind, I don't know what story out there exists that I myself could get behind. And so that was, again, that's a bit of a journey, but that was the origin story, and kind of what catalyzed my decision to specialize here, triple, quadruple, quintuple down here, and then to really focus on this and make it my life's work.
So when you look around the landscape now, seeing how it's shifted, what do you think investors today that are in our space are doing right and wrong, and the same thing on the founder side of the house?
Well, so there's been a massive proliferation of capital into this sector, right? I think if you speak with firms that have been doing this for a while, my friends over at Founders or 8VC, the good people over at Lux, right? Like if you speak to folks that have been doing this in an institutional capacity, because remember, I started out as an angel. Like these men and women have been deploying larger checks with greater expertise than myself for some time. I think we're pretty collectively aligned that, over the next 20-ish years, there will be 10-ish massive IPOs, 8, 12, something around there, right? There's not going to be this scatter shot of, SaaS-like outcomes where, structurally you really can't IPO a defense tech company for, say, 3 billion, 4 billion, 5 billion. You can with SaaS, and you can build a healthy 2x multiple in market over time. And okay, now you're worth 10 billion. And that's a great return for your investors. But with these defense tech companies, I think one thing that investors and even a lot of founders, like it's only recently hit myself, right? I think one thing we overlook or we misunderstand is just how massive these companies will be. Of course, everybody looks at the, open AIs, the Anthropics of the world. I have my own opinions about AI, but I won't get into that. They're worth, hundreds of billions of dollars. Is that a function of demand for names, or is that a function of how, of how great a moat they've built and how, established and, proprietary their foundation is? I don't know. The market will evaluate that over time, and we'll see that reflected in their pricing. But if you're a Castellian and you're the only startup in the United States building hypersonic missiles for DOW next to two primes who really haven't delivered over, a series of years / decades, you think about the government's appetite for highly complex systems like that and the number of them that we need, especially with the ever-changing face of conventional war. That's going to be a big company. If you look at Saronic, and if you look at what the Secretary of the Navy across several administrations has said for some time, along with everybody that has a seat at the table, there is a very big, there's a tidal wave, right, of change coming. And it really is, we want to deploy hundreds, if not thousands, of these ASVs across the world. And so you just start looking at the numbers and you start diving into it even more. And what you think you knew, you realize was just kind of like scratching the surface. And that scratching the surface even was like, months and months of diligence, months and months of work. And so I think broadly speaking, right, is VCs are capitalizing too many companies here. It's not a bad thing that we have this much interest in defense tech, right? We want good people building good solutions for, again, the sovereignty of the United States for the warfighter. It's just that we also have to be realistic as VCs and fiduciaries that so many of these companies and great ideas are maybe not venture scalable, which at least for Silent means that it's not investable for us. I think there are folks with really great playbooks in other sectors that have tried to, transition and slide into defense tech using those playbooks for other sectors, and it's just imploded because defense tech is not. It's not SaaS. It's not fintech. It's not health tech. It's not developer tooling. It's not AI. It really is its own thing. To me, it's most akin actually to biotech. And just like I would invest in biotech because I have no clue what I'm doing, I think those that are entering maybe as generalists or opportunists, right? That's understandable. Their LPs are making demands of them. But that leads to, again, overcapitalization. And so I think there's an unrealistic expectation as to the number of companies that will have seriously large outcomes, the type that VCs want. I think that because of that, there is serious overcapitalization by VCs. And look, there's a deployment function here. There's a certain amount of money that needs to go out. You have to raise new funds, right? There's a lot of kind of behind the curtain stuff that a lot of VCs and platforms specifically need to consider outside of just whether or not defense tech is overcapitalized. But I think a lot of folks have done a good job learning and starting to hone and focus their bets around certain names. We've always taken a very concentrated approach because if outside of Anduril and its eventual IPO, influencing and pulling up many other IPOs of companies that may or may not be ready, at least they won't be SPACs, they'll be traditionally underwritten. Outside of that, we really do think that the number is, we really think that number is around 10. And if you think about over the next 20 years, you have to concentrate in certain names. So I think more and more folks are adopting this type of mindset. But I also think that kind of the damage has been done in the early innings to a degree. And we'll see how this, persists into the future. I'm happy to speak, Mike, about what I think founders are doing well and are not doing well. But I also just gave, a 5-minute response to that question.
No, that's good, but I do think our founders, we just speaking from context, right? We have a strong portfolio of founders that are operating in defense tech. We get pitched. There's a huge hunger from the veteran community for the same things that you just talked about, right? Of people hungry to kind of give back and stuff. And so, as a team, one of the things we try to always do is help them avoid a lot of landmines out there. So
Yep.
someone like yourself that's been operating in the space 10 years, has seen these challenges, I think a founder perspective would be super helpful.
Yeah, for sure. I think, those that have pitched me, those that know me, those that are part of the Silent Ventures family will probably tell you that the thing that I grill on absolutely the hardest is go to market. Um, again, if we go back to the arbitrage of what defense tech is, those three variables, again, price, lead time, quantity, we do see some truly innovative work in this ecosystem. I mean, Chris over at Hadrian, right, has literally reshaped how we're producing in the United States. And it's ironic. An Australian came to America to fix our problems, right? But now we're not just, nearshoring, we're reshoring. And because of that, I think that because of Chris and others, I think I've learned, right, a lot of the pitfalls versus, as you say, Mike, the landmines, a lot of corners to see around. And because of that, on the founder front, especially referencing how important people are to this variable, it is my estimate that not all the time we are engaging in innovation from first principles, right? A lot of this, missiles are missiles. We've had many sets of missiles, many different groups of drones for a long time. A lot of companies are just building them better and again at scale and price points that work. So then it comes down to, okay, you have great technologists, you have a great product development men and women, right? How are you selling? Because selling to DOW as a single use or even as a dual use company is is a skill in and of itself. It's not something you learn overnight. I grill founding teams about how they are going to achieve a program of record 3, 4, 5 years from now, right? Three, that's a little bit sporty. If they were able to pull that off, that'd be pretty phenomenal. But 5 years from now, how are you attached as the prime on a multi-billion-dollar contract? And it really is an experiment. It's a mental experiment, right? One, to understand if the founding teams even comprehend, right, the complexities of selling into government. But two, if they have and they're well versed here and they have 10 years of doing this prior, then what their plan is and is it feasible, right? You have to in this industry, right? You have DOW that has its many forms of contracting vehicles, and each of them implies something different. And grants look like revenue, and vice versa. And people focus on non-dilutive funding, and that we don't care about that. Raising venture capital is to hyperscale once you've achieved product market fit. So if you're coming to us, you're on your way to being a unicorn. That's what we think. And if we back you, that's us agreeing. But you know, you need to know the contracting vehicles and all the stipulations and parameters around them, including payout mechanisms, milestone achievements, the impact of CRs, right? Is the IDIQ funded or unfunded, right? How many companies say, I just landed a $50 million IDIQ? 90% of venture capitalists go, oh, okay, so 50 million in revenue. There's not even a question as to whether or not, the NDAA supports something like that if there's been money appropriated, and whether or not that has been captured by the company that has the IDIQ. Are they pulling from reconciled dollars? Is there budget to be spent that's outstanding in DOW across certain agencies? Is this something that you have to lobby for, right? And add with Congress, meet with HAC-C, SAC-D, they got a block, right? And then, ultimately convert that into appropriated dollars. Does it reconcile with the president, the executive branch's understanding of what's important from an innovation standpoint and how we're going to use US taxpayer dollars? I need to understand that early on, because if you have not given that thought, serious thought, and if you do not have the skill set as a founding team to engage in that complex navigation, that journey, then it doesn't matter how good your tech is. It doesn't matter how good your team is otherwise. It doesn't matter how remarkable the product is or how big the market is. If you can't sell it because you don't know, that's not a skill you're going to pick up overnight. And we're not in the business of hand-holding founders. We want them to be able to execute from day one. And so I think, Mike, to kind of answer your question is, at least for us with respect to defense tech, we see plenty of well-intentioned people with great product chops, good technology, right? Really awesome missions and like epic visions, who have not engaged in B2G, like business to government sales before. And that's just a really steep hill to climb. It's nothing against them. And of course, we passed on companies where that was a concern to me, and I'm sure that some of those companies will end up being big hits. But that's our red flag, and that's something that I think is quite pervasive across defense tech. As you mentioned, like, people are hungry. They want to be involved in this. And they're finding ways, which is awesome, to slot in. They're not opportunists. They're not charlatans. Like, this is what the new generation of entrepreneurs wants to build. This is what young people, this is what, middle-aged adults are focused on. That's awesome. I want those people building these companies. Over time, as the market grows, hopefully we'll be able to support more of them. Hopefully there will be more exit pathways. There will be more liquidity events, and then that flywheel just continues, and the United States continues to have a global absolute monopoly on innovation, especially within national security. It's just right now, some of those skill sets are not fully baked because, in the most liberal of estimates, right? Defense tech's been around for 10 years. And really Palantir and SpaceX started it right in the early 2000s, and they wrote the playbooks. But even then, people were betting against those two companies. And only once Anduril really took those playbooks, took their hyper intelligent folks, founded a company, and made defense tech mainstream, did people start buying in and trying to figure out the skill sets and learn how to differentiate themselves. And so we still have time to go on the educational front, right? And I think a lot of founders, before they become founders that want to build here, should actually give themselves time, work for a neoprime, work for some of these startups in a government affairs or BD position, and learn those ins and outs with really smart people around them, such that when they come to VCs and they get grilled on this topic, they already have a business plan ready to go.
I'm gonna pass it to Mike because I know he's got a question. But one thing I wrote down for you is ruthless on the go to market.
I try ruthless, but I try to be I try to be impartial and fair. So if I'm wrong, and believe me, founders tell me I'm wrong, and sometimes I learn. Like then it is what it is. But I need to have good answers there.
Jackson, you mentioned earlier, the best ideas are contrarian until they're not, and then just with the valuations right now, the 3.8 billions or the 2 billion valuations of different companies. Has defense tech officially moved from a contrarian niche to a consensus bubble?
Yes and no. For what it's worth, I still think we're very far away from a bubble, because I do think a lot of companies have absorbed capital that should not have been funded to begin with, and unfortunately, they will churn out of the equation, and more focus will be on the legitimate companies that are building correctly here that should have received, let's say, all the dollars. But again, those are the market dynamics. That's what makes this industry a bit weird. I think for those in the know, again, those in the know that have been doing this for some time are patient investors. They're not really opportunists, right? And we're good at many things, and we don't do other things great. But when it comes to defense, we think we're pretty good. We're very patient. We have no urgency to deploy capital immediately, because again, if you go back to what is the core to our thesis and the mandate that we've pitched our LPs and their expectations, there's not 5 new unicorns being created every year that you need to invest in right now. There is an element of concentration for the best companies that you've invested in that you should continue to double down, triple down, quadruple down, right? And so our investment framework is a little bit different. But, I think defense is still contrarian to a degree. I think it's definitely becoming more mainstream. We see plenty of firms, again, giant platforms, generalists that have been getting smart in this area for several years. And to their credit, 2 years ago, if I brought a deal to X, Y, or Z, they're like, hey, we don't want to waste anyone's time here because we're not capable of investing yet. We are getting smart. Some of those people say it as an excuse, but a lot of them have actually stuck around, right? They haven't churned out of the equation. They haven't actually been tourists like many have talked about. And they've gotten smart, and they're dipping their toes into companies that I would say like a mid stage or a growth stage, or at the growth stage, because that's what's comfortable to them right now. Eventually, they'll probably move upstream, right, more to like Series A and Series Bs. But I do think that there are companies out there that have taken a lot of investor dollars that have been financed to the nth degree that are not in the best of shape. I think a lot of VCs who again are in the know and have been doing this for some time would say that. But almost everything like in the investment world, from public to private assets, there's cycles of boom and bust, right? And so where is it that you entered is one of the main questions, right? But then again, also what is your thesis around the space? My answer to this question is that if you're talking with a venture firm that thinks there's going to be 50 IPOs in the next 5 years, then the way that they invest is sensible to them. It's not sensible to me, who ultimately is proven right as a function of market forces, right? But I think we're still early on. And as I alluded to earlier with Mike, is this is a massive market. It's growing. And if you're dual use and your technology is good enough for the US government, is good enough for AUKUS, right, is good enough for NATO, it's going to be good enough for the private sector. When when Dev Crew signs off on something, like, you should buy it if you need it in the commercial sector. There's no other like proof points, right? You shouldn't have to go into bake-offs with other companies claiming to do this thing better than you. Like, no, the choice has been made by some of the most elite forces in the world. So when you layer on dual use, right, and you layer in kind of the sizing of global commercial markets, you know, we then quickly go from one and a half, $2 trillion for just U.S. spend to several trillion for, you know, global allied spend, to then many tens of trillions of dollars, you know, across the landscape for various technologies. And so I say that because, you know, we have our dollar amounts. You can evaluate how large this market is. You can evaluate the CAGR. You know, luckily nothing is too out of flux. How people arrive at those conclusions is usually within like a, you know, the correct standard deviation. And ultimately, if a lot of these companies that are selling into government, if they build out really remarkable commercial sales pipelines and achieve product market fit there, then this whole notion of boom, right, and then bust, it kind of evaporates. There will be, of course, casualties, right? Like that's true of any startup sector. But I think that we still have a nice middle ground. Again, lots of money being spent on things that may not work. I don't think that's unique to defense. But then also companies that are breaking out, right, and becoming clear neoprime winners. Well, I guess that's yet to be defined. Clear leaders behind Anduril as Anduril embarks on its IPO aspirations. And so it seems like there's the correct foundations to this sector. It seems like there's the correct sequencing to growth. And it seems like along that path, you know, kind of the right companies are emerging as kind of, you know, selected winners, and then others are falling behind. Not unique to defense tech. I still don't think we're mainstream. I think there's plenty of people who have a coastal ivory tower kind of mentality, you know, looking down from above, and you know, they have their ethical and philosophical qualms about this. And I will go toe to toe with anybody about this. Is they don't realize that they are empowered to do what they do, and they live the life that they live because of people like the two mics here, right? And if you can't get on board with supporting our war fighters, if you can't get on board with you know, with you know, providing them superior solutions, if you can't get on board minimizing casualties and death and maximizing the likelihood, the probability that our voluntary war fighters come back home unharmed, then to me there are some more systemic questions maybe about how you invest and how you think about the world. But that is, you know, that is the those are the opinions of others, and they're entitled to them. So we still have some, you know, like we still have some concerning areas to get over. Not many people are super, you know, aligned with kinetics or energetics, right? A lot of people have problems with munitions. I think what those people fail to understand is folks like me, we're not war hawks, but we are realists. We prefer a diplomatic avenue to anything. We prefer soft power. But I would also say that soft power without the threat of hard power is meaningless power. And nothing comes from those deliberations. You know, just look at Iran. For decades, we've appeased them with diplomacy, right? And all of a sudden, within a year and a half, not to say that, you know, Trump is, you know, perfect or does certain things better than others, but he took action against that country. And that country is now at its weakest point it's been in decades. So much so that, you know, they're coming to the negotiating table, albeit like, you know, quite frustrated because they have their population rising up against them, against this authoritative, you know, regime that's clamped down on every single human right that we take for granted. You know, and so there's still room to grow. We think that certain categories need to be invested in. Some of those categories, I guess, are still contrarian. Many others are not. I don't think any of us, though, invests in those more ethically questionable categories and says, we hope that this is used. We want to build up our inventories. We want to make sure that the threat of a deterrence is significant enough so that nobody ever engages in conflict. And so long-winded answer, but I think that's a big question that deserved kind of a holistic, comprehensive set of angles for you.
I have a few quick, hopefully rapid fire questions. So
Of
you
course,
mentioned
Tim.
go to market's really important. What is
Mhm.
the most critical trait for a founder selling into the Pentagon defense today?
Oh, that's the worst rapid fire question to begin with. I think the most important trait is probably the institutional understanding of how Congress, DOW, operate independently and then together to yield results.
For a $1 billion or a roughly unicorn defense or dual use startup in 2026, which exit's more likely, an acquisition or an IPO?
Man, you're crushing me here. uh, at just $1 billion, probably acquisition. I think if you crank that up to 5 billion, IPO.
What's your favorite non tech book, meaning a book outside of business or tech that has most influenced your worldview?
Uh, the Intelligent Investor. I think it's pretty standard reading for all of us. It's very insightful. It's something I read in high school, and it taught me a lot about the finance, economics, and the stock market, and how to at least be performative. And that was a very meaningful book to myself. Probably kind of like got me on the rails for what I'm doing now.
What is one technology the DoD, DoW is ignoring that will be common on the battlefield in the future?
I don't think they're necessarily ignoring it, but they're not placing as much emphasis on it as they should. Electronic warfare and Group One drones. The swarming capabilities are absolutely insane, and having that offensive capability, you clearly then need a defensive capability. And I think for Group One, electronic warfare is the way to go.
What's something you're working on right now that has absolutely nothing to do with Silent Ventures or why you're on this podcast?
I'm an avid hobbyist. I quite enjoy collecting rare whiskeys and bourbons. Um, don't judge me. It's kind of nerdy, but I've retouched and or I've retapped into my roots as a child of as a Pokemon collector. Pokemon cards are now something that I like to collect and rip open, and that's quite it's there's some good serendipitous memories there. Uh, Outside of that, I do quite enjoy traveling and meeting with all of the founders that I've invested in and people just generally interested in defense tech. That has something to do with my work. Spending more time on me, as goofy as that sounds, is just having a better work life balance. A lot of what we do, you guys know, really, it really can take up quite a bit of our day. And that's important. That's our job. That's what we're paid for. But if you don't take some time to yourself, and whether it's your mental health, exercising, a day off of devices, going on vacation, um, everything eventually will come crashing down.
It's great advice for founders who are constantly going at it. These are probably a little bit longer questions, but for any founder who's listening or any investor who might want to co invest with you, what are you looking for right now in terms of startup or stage or types of founders?
Well, we only invest at pre-seed and follow on at seed. We have the ability. We have several vehicles to do mid-stage and pre-IPO, but that's not where we necessarily make a market. That's going back to the kind of concentration theory or the power law on steroids. That's how we quintuple, quadruple, you know, uh, you know, quintuple, quadruple. No, quadruple, quintuple, sextuple. Our exposure to certain companies. It has to be pre-seed. We have to be money in there, and then we will follow on significantly at seed and make sure that our companies are paired with excellent Series A VCs. Um, from a founder standpoint, we're looking for folks. Again, hand holding is not the business we're in. I really wish I could, and I love educating folks. And I do work with my founders, right? And I think all of them will attest to that. But we can't be building a company for you, and so founders have to come in with the correct skill set, right? On the go to market front, as I've stressed, as Mike duly noted, right? And then, but with technology and a market gap that is painfully, it might not be obvious, but it's painfully existent, and that's where we diligence, and that's where we confirm what they're saying is true. But we're not looking for rinse and repeat, and some of that is happening in defense tech, right? there's many great companies building Group 1 drones. I'm not smart enough to decipher which company is going to win there. So we're looking for new ideas. We're looking for ideas bordering on like plausible science fiction, and we're looking for founders that know how to execute.
And to double click on that, how much is it that it squarely has to be in defense tech, or are you very happy looking at dual use that might go into defense tech?
So we dual use is fine to us. I think the problem is that when you try to implement dual use from the onset, pursuing both government sales and commercial sales, we won't do companies like that. I've built companies. I've seen many of my companies succeed. I've seen my angel investments fail. Right. I think through osmosis, I've just absorbed enough to say, look, dual use is a thing. Don't get me wrong. I think some VCs and even founders use it as optionality to minimize the perception of risk, right? But most companies should capture the long tail of the other market. If you focus out as single use, right, and you're selling to USG, then several years down the road, assuming you've achieved product market fit with USG, excuse me, then you should be selling, you should revise your product and create a derivative for the private sector, right? And vice versa. If you built something that has serious product market fit in the private sector and it has applications within government, then you should build out that capability set. And so for us, dual use is not a question of if, but when. And for us, it's patience. It's down the line. That's how you grow a company massively. Those are my thoughts. Of course, everything is dual use, or some things are single use. It's all up in the air. The taxonomy, the taxonomy of how companies are built, and all the periphery variables and how they want to define this, that, or the other is growing. The lexicon's growing, but that's at least how we think about it when we try to dig into the core of what a company is and how is it going to execute and where's its focus going to be. And so dual use is fine to us. It really is just, where is your starting point?
Amazing. Thank you for joining us, for sharing your insights on defense tech. You are definitely one of the experts. When founders come talk to us and they're saying, hey, we want to go raise from a great defense tech investor at the pre-seed stage, you come up, and we hope to co-invest with you in future startup companies. We hope we can have another conversation one day in the future about where the state of defense tech is. Jackson, congrats on all the success you've had, and thank you for taking the time to chat with us today.
Oh, thanks for giving me the time, guys. It's been a pleasure.